In the past decade, we have seen two major bubbles. First the dot-com bubble, then the mortgage bubble. Do you think the emerging market story could become the next bubble? And how sustainable is growth in China?
So if you talk about a bubble, you need to talk about a disconnect between fundamentals and prices, right? And I think if you look at what's happened in the dot-com bubble or in the property bubble, which is the last bubble that led us to this crisis, they're very different to what we're seeing in emerging markets. What we're seeing in emerging markets now is still, in terms of price in the stock market, very, very far from the potential of those markets. For example, we are seeing China as an economy becoming larger than the US in 2027. That is not reflected in the market. As we know, China has become larger than Japan this year in 2010. We think that if you take India, Brazil, and China in particular altogether, the potential is very large. Furthermore, valuations for the emerging markets is very attractive at those levels. So although we've had some worries about the emerging markets, particularly in line with inflationary pressure, I think they're actually still very good markets to hold in this environment. So how sustainable is the growth in China? As we know, China going forward is moving to another type of growth. For the past 25 years, we've supported growth through an industrialization and a very strong fixed asset investment model. Going forward, as is explained in the currently implemented new 5-year plan, the 12th 5-year plan, we're moving towards a consumption model. Now, this is very important because target growth for the next 5-year plan is going to be about 7%. Now, in 2011, we think China will achieve 8%. Now, that is down from 11 and 12% that we've seen in the previous 5-year plan. But this is actually very healthy. The sustainability of the growth in China through this slowdown in growth is achievable. Sustainability will be achieved through a better use of energy. So, for example, China is targeting to have about 11.4% in 2015 of the energy that it uses overall coming from non-fossil energy versus about 8% currently. Also, a lot of emphasis put on quality growth and also changing the way the local governments are incentivized in China in order to help align the central and the local government's interest.
What are the key challenges for emerging markets on their way to power shift? Is it inflation, commodities, social unrest, environmental issues?
So what are the challenges for emerging markets? Well, clearly, because they are growing so fast, one of our key trends is demographics. And as the population in the world goes from 6.8 to 9 billion people in 2050, most of that growth, 98% of that growth, comes from emerging markets. So clearly, one of the challenges is going to be to manage this massively growing population that is also rising in terms of per capita income with the impact it has on food, on commodities, as we're still urbanizing very fast, a lot of those countries, and of course on environmental challenges. If you look at China today, China is the largest emitter of CO2 on the planet, and clearly the measures that she is taking in terms of trying to be much more efficient in its energy usage, as well as using more alternative energies or non-fossil energy, is very important. But we also have to think of the issues of water, for example, which in China and in India are still very important. Another key point is infrastructure. Well, China is very well developed in terms of infrastructure, which is why its growth partially has been so strong. Other countries like Brazil or India still have a lot to do in that area. That means that we need very good long-term policies and government vision in order to lead the countries towards this state of development.